Joe, we posted a video last week, an interview with Steve Keen that we'll link to here. And Steve Keen was at the American Monetary Reform Conference in Chicago last weekend. He admits that he's not a monetary reformer. He made the assertion in a panel that monetary reform wouldn't have prevented the crisis of 2008. The cause of the crisis of 2008 was leveraged speculation on assets. And he went on to describe a couple of new measures for reining in leverage speculation on assets. So, Joe, if monetary reform wouldn't have prevented the crisis, what are we doing?
I think that, Steve Keen maybe doesn't understand, what we're proposing for monetary reform, Pete, okay? It's a completely different system. His whole concept of, leveraged speculation, which is really a shadow banking activity, really, Pete, could not happen under a full monetary reform system, a fully reformed monetary system.
Joe,
okay?
could there be any of what we call shadow banking if the American Monetary Act were passed?
No, there couldn't be any shadow banking.
No shadow banking.
No. It was one of the. I mean, that was one of the early, one of the many reforms, from Glass-Steagall, getting out of the way. But even Glass-Steagall didn't go as far as monetary reform. So we have to look at, that leverage speculation. What does that mean, Pete? That means that a group of shadow bankers, have the power under this deregulated financial services industry that we live under right now, that have caused this crisis, that they actually have the power to create money, Now, we could talk about money, but in a reform system, no bank, no investment bank, no shadow bank, no commercial bank, no bank would have the power to create money. The money for the national circulating medium of exchange, the money as we call it, would be 100% created by the government. So where does this leveraged speculation come from? What is it leveraging? If they don't have the power to create funny money, structured investment vehicles to pile on top of a bunch of, mortgage-backed securities themselves being, early non-monies, because they use debt payment streams, Pete, is an important thing, but debt service payment streams. But anyway, so there's no possibility for there to be a shadow banking industry. There's no possibility for there to be a system of leveraged speculation. So that to me means that Steve just does not really understand that. So we've got the two basic components that need to be kept to the fore. One, all the money that is going to be created to serve the objectives of the national economy, Pete, to have that 2-3% growth next year. That's an amount. All of that amount of money, Pete, is going to be created by the government during its budgeting process and identifying what it's going to be spent on. It's going to be spent into existence. It's going to be deposited into the banks. As it's deposited into the banks, it's real money. It belongs to somebody at that point. All of it belongs to somebody. Now, those people are free to speculate. Those people are free to speculate. Anybody wants to invest their money and take a bet that whatever it is that they're investing is going to go up and not down. That's fine. That's the name of the game that we want to keep going, Pete. That's not the game we want to stop.
There's a difference between just speculation and leverage speculation, is what you're saying, right?
Right. And the highly leveraged speculation, I mean, being defined somewhat in Minsky's, financial instability hypothesis as really the Ponzi element. It's the Ponzi element.
And
it's
the bubble blowing element.
The bubble blowing element, exactly. So we would completely have removed the ability of shadow bankers to exist, and of commercial bankers to get involved in that type of leverage speculation. So to me, it's Steve's, just his inability to grasp what it would actually mean were monetary reforms to take hold and be in place. It's his inability to grasp that for him to say that it doesn't solve the real problem. It does solve the real problem, and it does it by statute. Not by laying on, some more regulation. In fact, it would do a lot to unregulate, by removing the moral hazard from a lot of what we do. The banking industry itself in fact, banking would be a much freer, ability to operate.
Joe, you and I were both there in the audience when Steve Keen was on that panel with several other monetary reformers and made the statement that monetary reform wouldn't prevent the crisis. And it wasn't really vigorously rebutted. And I wish you had been there to make this argument that, I mean, pure and simple, with full reserve banking, there's no shadow banking. There's no leverage speculation. Yeah. It's related to the money. Leverage speculation is related to the money creation power by the banks. Another criticism that Steve Keen had of the American Monetary Act, Joe, was he said he just didn't trust the government to create the money. He's, he's not necessarily a small government guy, but he doesn't trust the government, and he's not the only one out there who says that.
The fact of the matter is that there are certain things that we have to trust the government for if we're going to have a level playing field for the national economy. The free marketeer, Mr. Free Marketeer, Milton Friedman, Pete, he supported these monetary reforms. Why? Because he said in the fiat money system, the natural monopoly belongs to the government, and it's true. So in a way, you have to kind of overcome the growing anti-government with nobody defending the government. We've had that conversation before. Movement that's going on out there against what people really want, Pete, is stability. They want economic stability. And the only way that you can get that with money is if the government creates it. And, built into the mechanisms of review and accountability, which is what you really need. In other words, you need to be suspicious when the government is acting. That's what you need. And so you have to demand, transparency and accountability. And when you have that accountability, if the monetary authority fails for whatever reason to meet its objectives, off with the head, not really, but of whoever's in charge, and somebody else goes in charge. So I don't think that it's just completely can dismiss the government when it's a government role, such as creating the money.
It's not like the government couldn't screw it up. It would have to be done right. The electorate would have to see that it was done right and vote accordingly. It would it couldn't be done without an enlightened electorate. So.
So
we hope for the best in that department.
We hope for the best in that one.
But there's no other game.
Right.
But an enlightened electorate, right?
Yep.
Okay, Joe.
All right, Pete.
We'll talk soon.
Next time. Yeah. Thanks.